Time now for the markets with Layton, and not long ago it was low water that had the upper Mississippi River shut. But now?
Now barge traffic, believe it or not, actually suffering disruptions due to too much water, flood conditions in other words. Of course, all that rain first fell on farmland, and in the markets this week, planting delays due to weather are becoming a real concern for many analysts. Meanwhile, cotton slides back to early March prices, while the recent on-feed reports suggest changes in the nation's feedlots. Traders are indeed beginning to worry about planting delays this spring. Here in Mississippi, corn planting and corn emergence is definitely behind, but not as far behind as parts of the Midwest. Nationwide, only 4% of the U.S. corn crop now in the ground compared to 26% at this same time a year ago. Many analysts look at weather forecasts for the Corn Belt, and they don't like what they see.
I'm just about ready to hit the panic button on it now, because when you look at the 6 to 10 day forecast, Illinois is still got rain in the forecast. So when are they going to be able to dry out before May 15th? Iowa is still very cold. So when is their soil ever going to be able to warm up before May 15th? So there are these things. And there's also the consideration that the prices, when we're looking at corn, the prices for the September contract are 25 or 35 cents higher by the time you include basis. So the motivation to get planted early was very strong. And the window has pretty much been missed for planting corn that could be harvested in September and get those really high prices.
The cotton market, meanwhile, has been falling away from high prices. Analyst O.A. Cleveland notes that prices on the December contract are back where they were in early March. Pressuring the market this week has been both India and China releasing government-held cotton into the marketplace for sale to mills. Traders do say the drop in New York futures prices has cotton mills stepping back into the market to buy fiber, so the fall back in prices could actually help export sales. Analysts also note the slow planting mentioned in the previous story should be a supporting factor for cotton as we move forward. As for the rice market, futures prices are under pressure there from carryover weakness in corn and soybeans. Analysts think the upside potential appears limited despite good demand and continued good export movement of U.S. rice. As mentioned for other crops, again, rice planting running behind this year. Well, our trivia quiz this week deals with something you need to watch for this time of year in the outdoors, and that is snakes. Our quiz question: what snake accounts for the largest number of bites in the U.S. every year? Is the answer the rattlesnake or the cottonmouth, the bull snake, or copperhead? You'll find out the answer before the new Farm Week feature that's coming up. We shift into the livestock markets now. A new cattle on feed report has been released since our last broadcast. Extension economist Dr. Brian Williams answered some questions about those new numbers and the beef sector in general Thursday morning. Brian, is the fact we have lower prices now for corn and other feed ingredients reflected in the April 19th report?
I think the feed prices do have a little bit to do with it, just because an increase or a decrease in feed prices is going to increase our demand. But I think more of it is attributed to the February placements being so low. What it looks like is producers just kept their cattle, their feeder cattle, for a month longer and then sold them in March, possibly because of reduced gains and those sorts of things. Mm-hmm.
Now, live cattle futures, some analysts calling that market kind of weak right now. Mm-hmm. What's going on there?
It is a little weak. There's two things that are playing into it. The big one right now, both of them have to do with demand. First of all, we have our weather. The cold, the wet weather has kept delaying the grilling season. And then on the flip side of things, we also have our demand with the economy, and the economy's been a little bit weaker than expected, and that's really hurt the demand as well. But on the positive side of things, I don't think that that's going to continue, just because our supplies are so tight that once demand picks up, we're going to see prices strengthen a lot too.
All right, now the export picture, what's that looking like for beef?
Considering the supplies are so tight, our exports are still fairly strong. We've seen it take a couple of hits from a couple of importing countries, one of them being South Korea. They're about 30% lower exports this year compared to last year, and then Russia has cut off imports altogether as well. So those that's kind of what we're seeing in the export market. And because of this tight supplies, I think we'll see them kind of decrease over the course of the year.
And calf prices, any comment about maybe the outlook for that?
I think that calf prices are going to look strong going through the year. Again, I keep going back to the short supplies, the supply issues, and I think that's going to be the driver going through the year.
Fewer hogs are one headline out of the pork sector this month. Another one is that lower feed prices that we've already mentioned should bring hog producers into profitability soon. Analyst Alan Brugler provided this assessment of the situation there.
We have smaller slaughter numbers, less production. You get the barbecue season going and some other things. Right now we're struggling a little bit because the export market's not doing well. USDA started to report weekly pork export sales. The first week looked pretty good, 35,000 tons. Last week was in the teens. So the world market's saying we'd like to pay a little less for your pork, and once we get that to happen, then the market will go.
Before our feature story, let's stop by the trivia board for our answer this week, and it is D, copperheads. They account for the highest number of bites in the United States each year.